for those of you that have been to these before, here's what our goal was with this series, our community conversation series. It is designed to bring the people that are the subject matter experts, the people who are the directors of our departments, out of the office and directly to the public, speaking with people directly. Not just to say, here's what we do, that's important, but we also want to say, here's how the functions of our office work and how they benefit you as residents and us, all of us, as a community. So without any further from me, I'm going to turn things over to Beth.
Thank you very much.
All right.
I am Beth Schwartz. I am the assessor here at Clinton Township. Alicia Burnaby is our assistant assessor. She couldn't be here tonight. Paul, you stole my first line. I've been here 19 years. I started when I was 10 years old. I just tired of school. I wanted to come work for assessing. So we do have an assessor. We have an assistant assessor. We have 4 appraisers, and we have 2 clerical staff. They're all Clinton Township employees. They're all full-time employees, and they're all certified at various levels with the State Tax Commission. It is a statutory requirement to have a certified assessor. Actually, by default, it's Paul. Paul said, no, thank you. So he hires a staff. And that is at the local level here in Michigan. You might be familiar, like with Florida, it's a county assessor. Some of them are even elected. Here, it is a local assessor working right here in the community. We have a staff of 8 because we have over 36,000 parcels, about $12.5 billion of value. So I need that help, and that's why we have a staff of 8. So assessing, if you don't know, is mostly about the valuation of property, which is then used to compute your property taxes. Assessing and property tax law in the state of Michigan is based on a statewide legal framework and process. So laws are adopted and amended by the state legislature. Most everything we do is to carry out and administer those state laws. So you'll hear me talk about state law, state form, state mandated deadlines, state determined periods of times. That is because we get our marching orders from the state law. So we operate within the strict confines of that state law. But we are also local government employees, many of us a long time in Clinton Township, with an understanding of this area and this market. And market value is very important to understand because we determine market valuations. And we're also members of the Clinton Township staff at large. We all work together as a team. We're trained by the state, but we're very familiar with this region and this township. Fair and equitable is our guiding principle, and I did steal that from the IAAO. That's the International Association of Assessing Officers. I think that is the title of their magazine, so sorry, not sorry, but I read that a long time ago, and that is what I've kept in my mind ever since. The law provides the framework, and we interpret and apply and carry it out honestly, objectively, correctly, and consistently for the benefit of the system, but also, most importantly, for the taxpayers and the residents. We understand that property ownership, especially home ownership, is it's got strong emotions tied to your values, your history, your bottom line, and I hear that. And our job is to convert that into objectivity, to uniformly carry out the assessment and taxation structure by the law, and to ensure consistent application of those laws. I understand that nobody likes taxes, that's a full stop, but they're an essential part of providing services in our community. Okay, so our key functions. We have the administration of the General Property Tax Act of 1893. Yeah, 1893. They have amended it quite a few times since then, basically yearly or multiple times a year. That is our structure of everything that we do, and I think you're going to talk about that a little bit as well. And mostly, it's the preparation, maintenance, and defense of the assessment roll. So the assessment roll is every single parcel, every owner, address, legal description, valuations, and I treat it like a tangible thing. It used to be a very tangible thing. I used to have to print out 15 binders worth. Now it's literally the press of a button, but it's a whole year of work going into that pressing of the button. So it's a very special press of the button. So I treat it carefully. We spend a lot of time tending to it, and I care very deeply about the integrity of the roll. So assessing is the first level in annual assessment equalization cycle. So you think when you're done here, it's done. It's not done. So the vast majority of parcel by parcel work happens with my office and the assessment role. We physically, when it used to be physical, and now I can send the March board a PDF, but that gets handed off to the March board of review, which we will talk about a little later, but that's where you can appeal your assessment individually. When that is done, it all goes to Macomb County Equalization, and when they're done checking for uniformity, it all goes to state equalization, and they check for uniformity. Assuming everything's good, and if it wasn't good, you'd sure hear about it, those numbers after the March board don't change. So they go through county equalization, they go through state equalization, and we start over. At the end of March, I'm already working on the next year. It's an annual cycle with annual data every single year. I wanted to put in one thing that assessing cannot do, just because it can cause such hardship and problems. So we do not draft deeds. Usually when you buy property, you go to a closing company and they have professionals do that. But a lot of times you can do it yourself if you know what you're doing. Do a lot of people know what they're doing? I don't know. So we recommend you consult an attorney or a title company prior to the drafting, executing, or recording of a deed. That's a quitclaim deed. You can get a blank on the internet and you can fill it out with all the pieces and you can go record it and something goes horribly wrong. Your taxes go up, somebody loses ownership. It's a mess. So please ask assessing in advance about potential property tax implications. I can't help you fill it out. I can't say, do you want to be joint tenants or tenants in common? That's a decision you'll have to make, but I could tell you what it will do to your taxes. And then of course, do file a property transfer affidavit with assessing anytime you execute a deed, because that deed goes off to the county and we need that form in our office to know what to do with it right away. Okay. So great, when do we actually meet? When do you need to come to see us? When are we going to talk? You bought a property in Clinton Township. You have to file a property transfer affidavit within 45 days of the transfer. You want to apply for or change an exemption status. That's a principal residence exemption or rescinding it, which I do believe, Carolyn, you'll be talking more about the principal residence exemption. Okay. Disabled veterans exemption and poverty exemption. And finally, you need to tell us about changes or errors regarding your property, like your square footage is incorrect, you removed your deck, you added a patio, you tore out your basement finish, I could go on and on. Now, when assessing needs to visit you, Michelle was very nice. She's an appraiser for us. She's a residential appraiser. She's posing next to a township car. That's what we're going to look like. She's got a township vest on. It says Clinton Township. She's got an ID badge from the township. She's probably got a clipboard, a measuring tape, or a wheel if it's a very big property. So this is what we look like out there. They're all Clinton Township full-time employees out on the road. So you probably know if you pulled a permit, you or your contractor, so expect the assessor, expect the building inspector, and expect the assessor. That's for new construction, demolition, interior alterations. We're looking at the stage of completion. So if it's something large, we might have to come out there a few times before the end of the year. We're measuring it, we're sketching, and we're taking photos. Now the canvas, that is what we call the regular inspection and record verification. So we can do many, many, many things from our office, but this isn't one of them. Finally, seriously, anytime you have a question or concern, that's our Civic Center. I've circled the door that we're closest to. You don't have to walk in the door, but that's us by the flagpole. That's what our counter looks like. 8:30 to 4:30, we can answer your questions. We can help you look at property you're looking to buy, talk about exemptions, anything related to assessing, a deed you're thinking about doing. Again, I can't give legal advice, but we'll certainly tell you what some things could happen. Anything to do with assessing, if we can't help you, we'll send you to somebody who can. So that's all like the really high level stuff. But now we're gonna get into the details. So this is actually a 4-hour class that I've condensed way down for you. So you're welcome. The assessor must compute various values every year, every single year on all 36,000 properties for the assessment roll. Assessed and taxable values appear for the first time on your notice of assessment, which we'll talk about in late February, then on your July summer tax bill and December winter tax bill. So you see those numbers at least 3 times every year. And I'm sorry, but I'm just going to have to start at the top. I'm just going to read it, and then we'll talk about it. So true cash value, that's the dollars. That is the full market value, which means the usual selling price at the place for the property to which the term is applied at the time of the assessment, being the price that could be obtained at a private sale, not at auction or for sale. And the purchase price paid in the transferred property is not the presumptive true cash value of the property. To do that, an assessing officer shall assess that property using the same valuation method for all the other properties of that classification. So this is full market value in dollars at a set time, which is December 31st, which is tax day. So I put that in there because a lot of people say, you know, what I paid is the market. But if your grandma sold it to you for $20,000 because she loves you, is that market value? That's not fair. That's not equitable. If you have never sold it, do you never get reassessed? No, that is not fair, and that is not equitable. So we have to figure these true cash values in that way every single year. How do we do that? Looks complicated. Hold on. So most properties are valued using a modified cost approach. We've got a building value, a land value that equals your true cash value. Your building value is priced out by a state cost manual, again with the state, adjusted to our area, depreciated, and then factored using sales of similar properties. We add the land value, which we also do a study for, you get your true cash value. Assessed value, our second of the two, what you're probably most familiar with, is 50% of the true cash value. 50% is the assessment level in the state of Michigan. It's what they chose. I think some states do like 30 or 33, which sounds like a nightmare. Like, I'll be happy with 50, and even in half. So the assessed value becomes the state equalized value after state equalization. They're not interchangeable, but some people will say SCV, some people will say assessed value. If it goes through all those levels of equalization and doesn't change, which I hope it doesn't, because then I didn't do my job, we can use them interchangeably. So prior to Proposal A, 1994, the SCV was the value used in property tax calculations, which is value times millage rate. I did forget divided by 1,000 equals property taxes. So the value you used was your SCV. No limit on increases year to year. You might remember a 20% increase in the market is about a 20% increase in your taxes. And it was unpredictable changes to your property taxes every year. Am I going to be at 5%, 10%, 20%, 2%? Don't know. Very hard to budget. Among other things, along came Proposal A. 2 new values, our last 2. That's it. We only got 4 values. So introduce the cap value and the taxable value. We calculate a capped value. I like that word capped. We're keeping things capped. And compare it to the assessed value. The lesser, another restriction, becomes the taxable value, which is now used to calculate your taxes. So this is the structure. This is what I see in my head every single day. And I want to point out that the inflation, look at that, 2023, the inflation was actually 7.9%. But the law said it can't be higher than 5, so it was 5. 2024, it was 5.1. It can't be higher than 5, so it was 5. Those were our first 2 5s since the beginning of Proposal A. So quickly, because I really want you to understand this, it'll explain so much. Taxable value in 2020, say, was $90,000. 1.4% takes me to $91,260. Between $91,260 and my assessed value of $105, that's the lesser one, that becomes my taxable value, and so on and so forth. That one, 3.3%, that one, 5%, and so on. So when you get up here, your assessed value is $140,000. That's a cash value of $280,000. Your cap value is lower, therefore that's your taxable value of $110,047. You are paying taxes on $110,047, not $140 as you would have been before Proposal A. You could see that taxation restriction at work. Actually, 2 restrictions. The restriction on the inflation rate multiplier and the cap value restriction. So right, it never changes, right? It's always that simple. It's never going to be a problem. But why did my value go down and my taxes go up? Okay, so in 2023, it was 121. 2024, it slipped to 110. I don't know, a little downturn in that area. But look at this. Our last year's taxable was 98,984. By law, we have to put on that 5%, and it takes you to 103,933. It is still the lesser of the 2, so that has to become your taxable value. Yes, your assessed value went down. Yes, your taxable went up because there was room for it. We have to apply it by law. There's no other way. But then that 110 goes down to 100. That 103,933 with 3.1% is 107,154. Between the 2 of them, the 100 is now the lower, and that's your taxable value. And the last little disclaimer. What is uncapping? So here's the last thing that could happen. Except for additions and losses to a property, which we already know about, so just forget about you destroyed something or you built something. Annual increases in a property's taxable value are limited to 5% or the inflation rate, whichever's less. Yes, we know this. In the year following a statutory transfer of ownership, that limitation is eliminated and the property's taxable value is set at 50% of the true cash value. So that 121 goes to 130 like normal. If you sold it in 2023, that new buyer gets the benefit of that taxable value for the rest of 23. But the next year, even though that's my cap value, 103,933, we've got to set the taxable at the same as the assessed value. By law, have to do it. It's automatic in our software. It's going to uncap. And then it starts over for you as a new owner. That goes up to 136, 140. We're just getting the inflation rate. So within 2 years, you're paying on 137,648 instead of 140. Okay, so what is the notice of assessment? You get that thing in February, it says this is not a tax bill, and you go, great, chuck it. Don't chuck it, please do read it. It's got parcel number, property address up at the top. It's got our last known owner and the mailing address. So if you don't get one by the end of February, please do call us. We send it to the last known address, and it also goes to the national change of address. So if you've maybe got a forwarding at the post office or something, I don't know that. So please do call us if you don't get your assessment change notice. Over here, I think that's orange. It's got your exemptions. Homeowner's principal residence exemption, 100%. If that is your primary residence, you're looking for that. Down here are the values. So it's last year's and the tentative amount for this year. And that is the change in value, taxable, assessed, and state equalized, which at this point is going to be the same. Hopefully it stays the same. That is not dollar amounts. That's just the difference between 26 and 25. What that equates to in dollars is right over here. The change in taxable value will increase or decrease, believe it or not, it happens, your tax bill for 2026 year by approximately that much. And that's annual. That's between summer and winter. That's how much you can expect it to change. And then at the bottom of the notice, this is the same notice, it's just the bottom. It's got everything for the March Board of Review. The March Board may hear your appeal regarding an opinion of value or the transfer of ownership. We uncapped you and you didn't think should have. Say, whoa, 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 that was an exempt transfer. I was just adding a joint tenant. You can appeal it. You can also appeal your classification. But most people are there for opinion of value. We say it's worth this. I don't think so, and I can prove it. We do have a July and December board. That's more for correction of errors, for poverty exemptions. March is the only time you can come locally and appeal your value for residential. If you're commercial industrial, you can go straight to the tribunal, but you have to appear before the March board for residential. And then if you want to, then you can go to the Michigan Tax Tribunal. So where can I get information on my property? That's our website, Property and Tax Data Search, and it opens up, BS&A is our software provider pretty much for the entire state of Michigan. You could put in your address, your name, your parcel number, and you can find things like your sketch. If it's not on there, let me know. We had a little oopsie, we got sketches for everybody. You can find land information, building information, you can find sales, you can find taxes. That is available all the time on our website. You can also email or call us for a record card. I didn't get a chance to put one on a slide, but it's like a condensed version of that. It's a state standard form and it's got everything about your property. So you could say, yep, I got a deck. Yep, I got a porch. Nope, I tore that shed down. Give us a call, we'll remove the shed. So I really do want you to call. You can come in, you can call. That's our main number. That's the email that comes to me, but I might kind of put it out to anybody who could better answer your question, like our commercial appraiser, our residential appraiser, or me. If you can get a record card, you can ask questions. We're there 8:30 to 4:30. Please do come talk about us, because honestly, I could talk all day. I haven't chased anyone out to the parking lot lately, but I bet you I can talk longer about it than you want me to.
The reason why we did these together is because the work that Beth does then goes to the treasurer's office. And the treasurer's office then says, here's the valuation that we got, here's the millage rate. Times those two things together in a formula, and that produces the bills that you get July and December. So we're going to turn things over to Mike and Carolyn.
Good evening, everyone. I'm the newly elected treasurer to Clinton Township. My name is Dr. Mike Aiello. Obviously, I've never been a treasurer before, but I've been a long-time businessman, so I kind of understand how the mechanics of protecting money goes. So people ask, what does the Treasury Department do, or what does the treasurer do? And basically, the treasurer is the financial nerve center to the township. And what I mean by that is we manage all the money that protects the services that our residents like you get to enjoy, like the police department, the fire department, parks and recs, the senior center, all the many beautiful parks we have, and many of the other services that we offer that you get to enjoy as being township residents. But beside that, I have a statutory responsibility, a fiscally responsibility of protecting the monies that we have and invest them safely so we have money for future projects, for other things for you to join in the future. And that's not the only thing we do as a treasurer, but one of the other hats I wear is that I'm one of the 7 board members that make policy. I'm a policy maker. So I sit on a lot of other boards throughout the community, making a lot of board decisions to try to enhance and make your lifestyles better, and so you enjoy our community, and so we can improve things as we all grow and mature through our lives. At this point, there are a lot of other things that we do in our township and in our Treasury Department. I'm going to pass this over to Carolyn, our Deputy Treasurer. She's going to go through some of the day-to-day operations that the rest of our staff does in the Treasurer's office to give you a more detailed how this operates and how this all fits together. Thank you again, Carolyn. I'm going to pass it over to you.
Thanks. So thank you guys all for coming out. My name is Carolyn. I'm the Deputy Treasurer. I've been here for 8 years, and I love talking about local government. In the Township Treasurer's office, everything we do is guided by our values. And we know that paying bills like taxes, nobody likes it. So one of the things that we always try to make sure we emphasize is quality customer service and convenience. We want to make sure that we make it as painless as possible. And if you ever have feedback for us, we are all big believers in rigorous self-improvement. We love hearing feedback from you guys. We also work towards making sure that we ensure fiscal responsibility and safeguarding your public dollars. And they're kind of a little bit of both. So to give you a little bit of context for that, what does the Treasurer's office actually do? So we've talked a lot about taxes, but we wear a couple of different hats with that. All of the money that comes in through the township in some way touches the Treasurer's office. Because whether that's coming in through grants, whether it's coming in through building permits, whether it's water bills, and of course property taxes, that's all coming out to us. At some point, we're receiving it into the system, we're logging it into the accounting software, we're making sure everything's balanced every day, and we're also moving that money to where it goes. Part of that too then means that we're responsible for investing and managing the township's funds. So when we talk about investing and managing the township's funds, what's really important with that is not just what we invest in, but when we invest in it. Because all of our investments are guided by Public Act 20 and the township's investment policy. The idea is that safety above all, because we can't lose this money. This is public money. We're acting as fiduciaries for the public funds. We also need to make sure that that money's available when we need to use it. So let's say there's a big program, big work on a road that needs some money. That we need to make sure that we have money available at that time. So we look at the different cash flows the township has, and we stagger our investments to make sure that we accommodate that. We also make sure that we maintain internal controls and have separation of duties. Now, some communities, some townships are very small, and so you have one person who's the treasurer, and they're also working as the finance director, and hey, maybe they're also working as the assessor. And sometimes when you're really small, you're able to do that because you really don't have any other choice. But in our township, we're a robust township, and we're able to make sure that we have a good system of checks and balances. We're not the assessor. We send out the bills, we get the values from assessing, we get the millage rates from the taxing authorities, we create it, we send it out. We also work very closely with our finance department to make sure that all of our bank accounts are secure. We also make the more eyes you have looking at your money, the safer it typically is. I thought that the best way to approach this would be to first just kind of look at it from the customer service experience. So as we're going to take a deep dive into your taxes and into your tax bill, we're going to talk a bit about your water bill. But I thought, okay, let's talk about what kind of payments we take. We take cash. Cash is king. We'll always take it. Checks we'll take as well, personal checks, business checks, but the thing to bear in mind, there's a couple of things that we won't take checks on. For example, if you're coming in to get your passport, down, we won't take a check for that, because if your passport's done and the federal paperwork's already set, we really don't have a way of collecting that, right, for the services. Money orders we take, cashier's checks we take. We also take e-check. Card payments are a little bit different. So the payment processor imposes a 2.8% processing fee or a $1.50 minimum. Now for things like water, or say like paying like a water bill of $40, $50, it's probably gonna come close to the convenience fee of $1.50, right? Some people wanna pay it on their taxes. That's okay, it's an option, it's a convenience, but I don't really recommend the 2.8%. So how can you pay us? So there's a couple of different channels that you can. The most common one, one of the most common ones we get is mail. But with mail, a couple caveats. One, always make sure you have something to identify where you want that money to go to. If you send us a check and it's for say $100 or $50 or $1,000 and we can't tell where it's from, we're probably gonna return it to you because we don't wanna misapply that. Number two, another thing, be wary and be conscious of your due dates when you're mailing something to us. So the township doesn't honor postmark. When payments come in, first thing we do is we stamp the exterior, we process in the order that they've received, and we honor the date that it arrived in our office. We also take payments at our counter. We're always happy to see you. We try to keep it moving pretty fast to keep it for your convenience, but we love having people come in. You can pay over the web or through the phone using Point and Pay, our payment processor. And then for water payments, we do allow auto payments where you can sign up through our payment processor and have a monthly payment. It's initiated on your due date. It tells us, has a live link to our system, so we know, that payment has been initiated, we're gonna honor that. And as long as your payment's good, you're good. So, water payments. So, the water bills themselves are made by our water department. Any given month, we're having 28 to 30 some thousand water bills go out and be paid. That's a lot of people that was getting a bill. So what we do is we spread it across over 4 due dates. So depending on which region you live in the township, or if you're a business, you have your own specific due date. So just remember that your due date, and you have a friend who lives on another side of town, they might not have the same one. And water also works with us a little bit too when it comes to delinquent water. Now, the water department is not gonna typically does not turn off water for residential properties. Instead, what'll happen is like, let's say you have a water bill and you say, I'm just gonna let it keep rolling, I'm not gonna pay it. We might not be turning it off, but twice a year, in May and October, the water department is gonna look and say, okay, what are the amounts that are older than 6 months old, at least 6 months old? Whatever's that's there, they're gonna put it on the taxes to collect. So I don't necessarily recommend that strategy because you have the late fees, and then there's fees with that, and then it hikes up your water bill. And if you have your taxes paid by your mortgage escrow company, that's gonna drive up your mortgage payment. So you can do it however you'd like, but just be conscious that there's some additional fees with that. Which brings us to everybody's favorite subject, property taxes. So what actually are property taxes? So property taxes are imposed by, as Beth said, the General Property Tax Act of 1893. The bill itself, I thought about printing it off and bringing it, but it's like 300 pages. So there's a certain degree of nuance involved with it. But typically what happens is that taxes are applied to properties based on their valuation, except as exempted. So what kind of properties are there? There's real property taxes and there's personal property taxes. And you might say, my house is my personal property tax, but it's also kind of real property. What's up with that? Real property is like buildings and land. Your home is real property. Personal property, though, is property that you use in the course of doing business. So who do we actually collect on behalf of? So we collect on behalf of the township. So we got our operating, we got our police, we got our fire. We also collect on behalf of Macomb County, a number of county-wide entities, which like the Huron Clinton Metro Authority, County Veterans, SMART. We collect on behalf of the school districts and with the library. So we end up distributing money to them every 2 weeks during the tax season. So every dollar that comes in for the summer tax bill, for example, there's nothing from the township on there unless you have something special, but there's nothing on there for the township. So what'll end up happening, every dollar that comes in summer, we send it right on out, every 2 weeks. So I wanted to take you on a tour of your tax bill. So we're gonna go through the different parts of your tax bill and the relevant information on it. We're gonna talk a little bit about what Beth talked about a little bit on how to calculate your taxes and how to see how that plays out on the tax bill itself. So just to give you a quick overview of the tax bill. On the left here, this is the front of your summer tax bill. This is the back of the winter tax bill, but they should look more or less the same. On the left-hand side, you'll see there's a top portion here. And what this does is this is for your records, and we're gonna dive into all the different components on this. But if you're able to bring it in, if you're coming into our office, and if you could bring it in, we can print the receipt directly on the top. So then you have it all in one stop. The bottom portion, though, we're going to keep. And we ask that if you're sending us in a payment, send it with it, because that helps us know exactly where to apply the payment. It also, you'll notice both of these have like a barcode. We can scan that at the counter and pull it straight up. The back of the bill contains reference information for you. So it'll include the due dates, your payment options, any notices that we want to put there, what happens if your payment fails, the different fiscal years, upcoming dates that the township's going to be closed, the due dates, what happens if it isn't paid. And then you'll also put in QR codes here, and we'll dive into that in a second too. So the due date is the most important part of the tax bill. Here is my caveat here. So I have included in the upper right, we have the summer tax bill, and on the back, what the due dates might look like. It'll be, we try and make it as prominent as possible. So what's your parcel number? So one of the things I asked you to, if you're mailing in your payment, to send your coupon in, another thing that's helpful is to write your parcel number on the check in the memo line. Your parcel number is an identifier that allows us to look at your bill, your property, and link it to whatever is in our system. So they always start 1611. You'll find it in the upper right of the bill and on the lower left in your right above your mailing information on the coupon. So when your tax bill comes in, if you get it, there's a window, and that's got your mailing information. The parcel number is visible through that too. So on the left-hand side of your bill, you'll have your legal descriptions. Some of them are long, some of them are short. It depends on how complicated your property is. Another quick thing I wanted to mention, though, is you'll also see your school district. And something that we get a lot from people is, hey, why does it say Mount Clemens School District? Or why does it say Fraser School District? Your school district is not necessarily going to just say Clinton Township. So Clinton Township actually serves 5 different school districts. That's because different school districts emerged, like they developed it differently than the local communities did. They have their own separate histories with that. So we've got Mount Clemens School District, Fraser, L'Anse Creuse, Clintondale, and Chippewa Valley. You're only paying for one school district based on where your property is. So where do you find your total? On your upper right, so where we got is really doing the majority of the work of the bill. You'll see it below the millage table, which we'll dive into, and you'll also see it in the bottom coupon. It'll say the amount. So on your summer bill and your winter bill, it should look like this. Now, there's a couple exceptions to this. Let's say you reach out to us because after you missed your summer due date, you want a new copy of the bill. You'll notice there will be new information added both in the upper right and down here. It'll show you the amount that it's good through, because it changes on a monthly basis. It'll show you the base. It'll show you if you made any other payments. Similarly, if you have let's say for some reason if you get your winter bill and you haven't paid your summer bill yet, we break it down there. So you'll have your winter amount up here in the upper right and at the bottom, but we'll show you, okay, what's the amount for the summer? How is that changing from month to month? And what's the combined total? Now for payment options, we're always gonna have a big section on the back. And just as we said earlier, we take them over the phone, we take them over the web, we take it in person and through the mail. But you'll also see on the back of your bill, for the one that you get in the mail, a QR code where you can scan it. It'll take you straight to our website from your phone and you can make a payment. So principal residence exemption, I think that's something, like Beth mentions, there's a couple of different exemption types. The most common one, and the one that you likely have, is the principal residence exemption. If you live in your home and you own it and you don't claim this anywhere else, then you don't have to pay your school operating taxes. So when you're looking at your bill, at the top, you'll see your parcel number. You'll look here and it'll say PRE, and it'll say 100. That means you have the principal residence exemption on it. It also shows itself in another way, because when you look at the millage table here, it'll say school operating, it'll show the millage rate, it'll say you're exempt. So how are taxes calculated? Like Beth said, you're gonna take your millage rates, you're gonna multiply it by that taxable value, you're gonna divide it by 1,000. So 1 mil is $1 for every 1,000 of value of your property. And when you look at those millage rates on your millage table, as we'll see in a second, they go out 4 decimals. So it goes out quite a little bit there. So you're just going to multiply it, divide by 1,000. That gives you your tax bill. And when you look at your taxes, you can see it in action. You have that taxable value that Beth discussed. That's the number we're multiplying by these millage rates. And you have that state equalized value, so you can see the difference between the two. The other thing too is that all of the millage rates here, I kind of highlighted in blue. Sometimes you'll see things that won't have a millage rate. So it'll say paving there, that's a special assessment. So only if it's a taxes, will have a millage rate. It makes them an ad valorem tax. But if you have a special assessment on your property, or let's say you have delinquent water, or for some reason there's a weeds invoice that that a mowing weeds invoice that's on there, that won't have that there, but it'll show you the amount. So what do Clinton Township taxes go for? So everything on the left is going on your summer bill, and everything on the right is going on your winter bill. Everything that's on the left, none of it is being kept by us unless you have, say, a special assessment or something special that's going on that summer bill. And everything on the winter ones, we do keep temp fire, we do keep police, we do keep township operating so it can be spent. But it's important to know that township operating only represents 2% of your entire tax bill. So everything else, that whole summer bill is being sent on out. Some other things that you might want to look at your bill. On your taxes, let's say you have your mortgage company pay via escrow, you may send your monthly payments to your mortgage company, you'll see a little flyer that is up at the top in here saying tax information or tax bill has been sent to lender. You are still getting the bill because you're the ultimate person who's responsible for those taxes. But if you see that there, it means someone's requested your tax information. So if you pay off your mortgage, congratulations, you'll still be getting it. The way those mortgage payments work is basically your mortgage company's contacting us every tax season and saying, hey, give me a list of these parcels so I can send you the payment. And that's when we put a tag on there so that you know that's been requested. The other thing we put on there too is also when we create each bill, we put on a little note if you have a delinquency at the county. So the county is reaching out, we're working with the county to figure out, okay, what's your list of properties that are delinquent? So we can put a note there. That everything in taxes is set by law. So when we work on this, but throughout the year, every month we're doing something at the treasurer's office related to taxes, but it's only during certain times a year that we can actually accept payments. So we've put in red the dates that will matter most for you. So in May and June, we're working on creating that tax bill. We're getting information from the mortgage companies. We're getting information from the different millages that are being issued by the taxing authorities. We're putting the delinquent water, and we're sending stuff to the printer. We're making the little insert. In July 1st, those taxes are going to become due and payable. And then you can pay it to us at any point up until September 14th without interest. After that, you can still pay it to us. It's just that there's monthly interest that's being applied. And that's all going to be also distributed to the people that are on the entities on that summer bill. In October and November, we're doing exactly what we're doing in May and June. We're starting to create that winter tax bill. And then come December 1st, we're going to be saying you should be receiving that bill. Then the last day to pay overall is going to be February 28th. On March 1st, typically speaking, that's when it goes to the county. So what happens when taxes go to the county? The Macomb County Treasurer's Office collects on delinquent taxes. Per state law, we lose all authority and jurisdiction over those taxes. So as of the next day, we can't take those payments. When it goes to the county, they're putting on administrative fees and interest right off the bat to be aware of. So they might not be able to send you a bill right away because they're reconciling their accounts with our accounts. But you want to make sure that if you know that you go delinquent, the sooner you can reach out to them or us to find out what you may owe with them, the better. When taxes go delinquent, they are delinquent with them from a year. The county is not foreclosing on things like right away. So don't panic right away. We don't report to any creditors, and the county wants to work with you. For the first year it's with them, it's going to have 1% interest that's going on. At the conclusion of the first year, it starts a process called forfeiture. And when properties go into forfeiture, they increase the interest rate. And it's very important, just make sure you're aware of that because it can go up, the interest rate goes up retroactively. And then what they'll end up doing too is you still have a whole year where they're doing title searches and they're coming to visit. Come March 31st at the end of year 3, you're either entering into a payment plan or it could be potentially foreclosed on. But the county doesn't want to foreclose on you. They want to work with owners as much as possible, which is why if you do go delinquent, reach out to them or reach out to us so we can put you in touch with them. The other thing I would say is reach out to the Michigan State University. If you're having trouble paying, Michigan State University is a land-grant college. And so what they're required to do is offer different services. And one of those things is housing counselors, where they're certified, free, confidential, and they might be able to connect you with different resources to assist you. Couple tips and tricks. Remember, we accept partial payments. So if you need to break out your payment, if it's hard for you to pay everything all at once, we'll take partial payments and stuff. We're more than happy to. We don't do formal plans, but we can take it in that can mitigate any sort of interest that can go on. We don't really get into proration. People will often call and say, hey, how do I prorate this? I'm thinking about selling my property, but that's a private decision. So while many of the tax entities, if you look at the fiscal years in the bill, go forward, that is still ultimately between the buyer and the seller. Don't trust the mail. I just cannot underline that too much. So, and then with our Dropbox, just a quick caveat on that. We empty that Dropbox at the close of business, so everything that comes in after that's for the next business day. So just be aware of that. We talked a little bit already about uncapping during assessing. And then if you've ever got questions, we want to talk. We're happy to talk to you. It makes our days more interesting. And then if you need any information, we're happy to be there for you.
All right. Thank you for your patience. I know this was a lot to absorb, a lot to digest.
How does the township invest taxpayer dollars?
So Carolyn referenced this, Public Act 20 of 1943. And that determines that any public entity can only invest in the very safest vehicles. So CDs, commercial paper that is highly rated, AA or above. We can invest in bonds or there's a whole number of different vehicles, but it has to be, one, allowable under Public Act 20, and two, it has to be a depository institution that is covered in the township's investment plan.
What is the Headlee Amendment?
Here's my short answer on Headlee, okay? What Headlee basically said is that, okay, Clinton Township maybe used to be 50,000 people, and add up all the houses and all of the tax base, and it equals this level, right? Okay? Add more people, add more businesses, the amount of tax revenue coming into the community equals this now. That means you have to lower the rate.
Yeah, it rolls back. So the township is allowed to, I'm going to grossly generalize, collect what it did last year plus inflation. Then that's not, we talked about losses and additions. So if something's gone or something added. So if you have a brand new factory, a brand new apartment complex, you need money to serve those, that won't trigger any rolling back. You need the tax dollars for that to serve that. So if we get rid of losses and additions, if we're only looking at inflation, the township can only collect what it did last year plus inflation. And if it's going to be more, they roll back the millage rate. So that's why it started at 1 and now it's 0.7 something. And that's permanent. And it cannot roll up. Sometimes the math says you should go up, it can't. So it's what I was saying, there's so many restrictions in the system that you don't see. The caps, the lesser thans, the rollbacks, the sales study period. There's so many little components that you don't know what you don't know that is designed to keep it very manageable and very predictable and as least harsh as possible. So Headlee had to do a lot with rolling back the millages. So if you see operating, they voted a 2.2, why is it 1.9432? Because it's been rolling back. And that's on you as a homeowner. It might be a penny to you, but across the entire township, it's less than they got last year because you can only get inflation.
Is the township compensated for collecting taxes on behalf of other entities?
So the school districts and the township every year enter into an agreement where they pay a per parcel fee to collect on their behalf. So for every parcel that they're paying, I believe it's $4.25. I have to double check the paperwork. I just prepared it the other day. But they're paying us for each parcel, and we send them an invoice based on the amount of parcels that are being issued for that, and they pay us. Now, there is a benefit to us collecting on behalf of these other entities, because what could happen too is we work closely with assessing, we get all the numbers from them. But what you could run into alternatively is having a separate bill from the intermediate school district, a bill from the community college, a bill from HCMA. So by having the township act as the collector, it really serves as a convenience for our residents too.
Thank you all for coming. Appreciate it very much.
Yeah.
Always like a lively discussion. Thank you. All right.